Hello, this is Siwen Yi. Today I'm going to talk about an explosive real estate asset class, which is midterm or medium term rentals. Before I proceed with my presentation, if you see value of this presentation, please smash the like button and subscribe to my YouTube channel, and also put your email into my website so you can become our real estate investing newsletter free membership. Without further ado, let me share my screen and talk about this very exciting new asset class, which a lot of you are really should be very excited to hear. Medium term rentals is an emerging asset class. By the way, my background is that I'm a long-term rental space, having advised thousands of real estate investors like yourself to buy cash flow rentals in the most affordable markets within my real estate investment club. I only do long-term buy and hold 1 year annual lease renewable rentals, which is a pretty traditional long-term. A lot of people are accustomed to understand. This video is for people who already have properties. Even you could even potentially convert your primary home actually into a medium-term rental situation. But assuming you don't want to do that. So if you have another property or a vacation property or secondary property or investment property you've been renting over many years, over long-term, whatever, it does not matter where are you located in the country. Medium-term rental can apply and can work in any market, any neighborhood. So that's the beauty and the excitement of it. So you could, whatever situation you're in, even if you have a short-term rental right now, where are we located in the US? In all 50 states, you can do mid-term rental. So you have the ability, if you want to, that is, after you do your own additional research and due diligence, you can convert your long-term rental property into a medium-term rental situation, or a short-term rental property into medium-term rental situation, or vice versa. This 3 case scenario is really, as far as I'm concerned, I use this new terminology, is a Swiss Army knife. Your property can become a Swiss Army knife. Okay. So that's a very interesting term. Here's the methodology. If you find a way to potentially convert your property from long-term rental into mid-term rental, the ideal situation would be if you could increase your rent 50% higher rent projection. Does that make sense? Go on. Medium-term rental is an emerging asset class. This is the beginning of this asset class. Just short-term rental was established. How long ago was that? Like 5-10 years ago with the Airbnb and what have you. That was really emerged the past decade. Or mid-term rental can potentially achieve the same success. So you can potentially, like I said, you have the ability to skyrocket your current rent. So if you want more cash flow from your relatively low cash flow situation for your long-term rentals, if that's what you believe, then you have the ability to convert into short-term rental. So short-term rental is more than 30 days and less than 365 days. And look at this. This is truly amazing. The rental pool out there, maybe I misspelled the rental pool. Who are the potential rental occupants? We're talking the main, some of you already heard it, traveling nurses. Oh my goodness, traveling nurses. It's been around for a while. It will continue to really make this mid-term rental situation even better than it is. The subset of traveling nurses are traveling nurses agencies. You can hook up with traveling nursing agencies, the related healthcare recruiting agencies, and other medical professionals. The rental pool are also contract workers, right? Retirees, digital nomads, remote workers, college students, corporate rentals, military family, temporary relocation from one duty station to another, and people moving into a particular area. People are migrating. We have seen during the pandemic and the after effects of the pandemic, people are moving from one location to another. The migration pattern of the U.S. has been taking an epic proportion in terms of growth. People displaced from their homes due to fire, flood, etc. Insurance company paying while they rebuild. People doing large home renovations, like putting a second floor or whatever, and they need to relocate for 6 months. The possibilities are endless. Did I get you excited? You should be. Midterm rental are not subject to short-term rental regulation. Wow. Imagine that. Longer than 30-day stays and shorter than 365 days are considered long-term rental, traditional annual renewable leases in terms of the industry standard. Okay. So they have a lot of flexibility without the restrictions associated with short-term rentals. Most mid-term rentals, you can call it mid-term rentals or medium-term rentals. Yeah, this terminology is one and the same. Still, there's no definitive definition of MTR. I call it MTR for sure. Okay. When I say MTR, is mid-term rental or medium-term rental. So a typical medium rental stay is around 3 to 4 months per occupant or occupants. So therefore, in any given 12 months calendar year, all you have is 3 to 4 midterm rental tenants per year, which is not as bad as you think. So it's not that much work now, trust me. So anyway, so again, in order to make, for example, if you were to convert your long-term rental annual leasing tenant into a medium-term tenant situation, you need to spend more money. You need to fully furnish your property, either on a room basis or the whole entire unit. I'm just making an estimate. This is just an estimate. It all depends on each unique situation. With a particular house, you could reasonably spend around $5,000 to furnish a one room, a $10,000 cost to furnish 2 bedrooms, and $15,000 estimated cost to furnish all 3 bedrooms in a particular house. And landlord pays the utility. The question you have to ask is, should you rent out the whole unit or the rent out by the rooms? There's individual discretion. I personally like the whole unit renting out. Now, I'm going to go over the resources. These are 2 tremendous resources. I mainly focus on furnishfinder.com for the time being, although Airbnb can also manage your mid-term rental as well. But this is a little bit too costly with the Airbnb. Furnish Finder, I will share with you 15 minutes later. I'm going to walk through the Furnish Finder. You will see the value of potentially doing a mid-term rental. The next question is, as a mid-term rental for right now, because it is such a beginning stage of the mid-term rental space, that is, you are the property manager. Okay, some of you are thinking, oh, I don't have time to manage a wild rental. That's why I do the long-term rental for all these years. No, please have an open mind. It's not as hard as you think. So mid-term rental can work in any housing markets in the country. And if possible, if you want to cater to the medical professional, traveling nurses, it'd be really ideal, although not critical, if your property is located close to a level 1 trauma hospital with at least 500 beds. That's an ideal situation, but not totally critical. Like I said earlier, you have the flexibility of transitioning into LTR to MTR to STR, just to abbreviate for brevity. Okay, long-term rental, LTR, MTR, mid-term rental, and STR, short-term rental. Okay, STR. So you have the ability to scale. Okay, it all depends on how much effort you want to put into it. You can scale any of these 3 investment methodology. If you're really ambitious, you can do that. You can buy multiple MTRs, combination of the LTRs and STRs. It's a Swiss Army knife. You can do it remotely. You can do it passively. Regardless, it does not matter where you live in a country or even overseas. You could scale and make your real estate portfolio work either in a combination of STR, NTR, and LTR. And when your system and process and procedure is all set up, potentially you can only spend, whether you own 10 or 15 of the combination of these different type of asset classes. Some of you are thinking I'm crazy, but all you need to spend approximately 1 hour per week doing this, scaling the combination STR, MTR, and LTR. Isn't that cool? Therefore, long-term, you can exponentially grow your real estate business 10x, and MTR is the tip of the iceberg. Now, I'm going to skip on some of these slideshow for the future. If you want to buy a new investment property for LTR purposes, and eventually convert into MTR. These are my personally suggested top markets to pull the trigger. I'm going to show you a pro forma. This is a long-term rental situation, a traditional long-term rental property whereby buy it for $325K and you rent it for $2,300. This is a long-term annual renewable lease, traditional investment class, OTR, long-term rental. Yeah, you have to put 25% down, and the net monthly cash flow is around $200. That's fine. Over time, you will achieve your goal. Okay. However, if you do, as I said earlier, you want to convert it into a midterm rental. The expectation is for you to increase your gross rent by at least 50% from the long-term rent I just discussed, we just saw, which is 2,300, 50% in 2,300. So you need to increase your gross monthly rent to MTR, the conversion that is, from 2,300 on the earlier slide to 3,000. Now, this is the minimum requirement. This is just my opinion. You can do it, convert it to $3,000 monthly, then your monthly net cash flow will go from a couple $100 into at least $500 monthly net cash flow. Does that make sense? Well, it does. I'm not going to go through the rest of these because, in fact, I just showed you the slideshow. You could, on your own, pause this particular slideshow and digest. You buy a duplex on both sides for this amount with the monthly rent on both doors for $200. Get you a little bit of cash flow, but you can convert it to a midterm rental. Your rent can be $6,000. I had to factor in maybe 30 or 60 days or even 90 days of vacancy per calendar year because of a turnover from one MTR occupant to another. It may take a short while. It depends. But giving the vacancy factor, giving the maintenance factor, a little bit more maintenance are required for MTR. Having said that, same thing. You can convert it to MTR based on your due diligence, so you can increase your monthly cash flow. This particular scenario to from a couple $100 to $1,000. Same concept. You could do a MTR in any market in the US. Okay, isn't amazing? So in this case, somewhere in the Midwest, where you buy a single family home for $73,000, the initial monthly annual rent is $950. You put 25% down payment, a nice cookie cutter, almost $300 monthly net cash flow after all the financing, mortgages, and debt service and all that stuff. But if you can find a way in this particular neighborhood, in this particular Midwest market, if you will, doesn't matter where, to get your midterm rental occupant, increase the monthly rent from $950 to $1,450, for example, do the math, right? The monthly cash flow could potentially be almost $700 per month. Rental properties, the history is the most powerful and proven multi-dimensional real estate asset class. Many different ways to make money, right? Passive income, cash flow, tax benefit, appreciation long term. You get the power of a leverage using a fixed rate mortgage loan. The whole 9 yards. Again, you will go over this slideshow on your own, digest it. I don't want to spend too much time because I want to make this presentation nice, short, and concise. Because I'm going to do more videos on a midterm rental. So stay tuned for future episodes. But for right now, I want to share with you, this is really a great resource for you. Midterm rental is at its infancy. If you look at the baseball analogy, right now it's in my baseball season. You look at MTR asset class, the emerging asset class. I have to say that it's a 9-inning game, a 9-inning baseball game. I would say MTR is at its it's not even the first inning. You are getting ready to go to bat. The umpire are not even set up to man their position. We are the infancy stage of this exploding MTR asset class. Again, not mainly because of the pandemic and the new normal, but the pandemic and then creating a new normal situation where people doing digital nomads, people have the ability to work remotely anywhere in the country for the most part. Okay? And some people have to go back to work, but there's a lot of hybrid work concepts that are emerging. People can work wherever they want. Therefore, they want to spend 60, 90, 120 days at a location and they could still work full time and rent your house, whatever, on an MTR concept. So not just that, so many. Once after you watch my video and once you dive deeper, once you do some additional research, you could be mind boggled of the potential of NTR could be part of your real estate portfolio, right? Whether you have a rental property or not, you don't buy a rental property. I can help you, of course. I have many network agents available, many markets I can refer you to. That's what I do. I help investors to buy cash flow properties. I can easily convert it into NTR, even though most of my rentals are long term. I did some research on my own. Some of my rentals that I have, which is located in different part of the country, I did the research. I can convert it easily into an NTR from some of my portfolio, and I'm also able to achieve at least 50% or more in rental income increase based on my research by converting into NTR, and you guys can do the same. So with that in mind, let's go through this Furnish Finder, amazing Furnish Finder. This is a marketing platform. All you pay like $99 one-time fee to promote one property. And once you immerse yourself into this Furnish Finder, it's not similar to Airbnb. Although you can use Airbnb to manage your MTR, for example, it's very costly, but Furnish Finder, all you pay is $99. All the potential MTR occupants, if you have a property located in a certain area of the country, and you log in, and you are subscriber to a Furnish Finder, and given your parameters, someone can find you and they can contact you directly. When a prospect contact you directly, and then you communicate with that prospect. You do the background check, you do the credit report check, you will directly communicate, and Furnish Finder will not going to help you anymore. You are on your own. You have the ability to go through your pre-screening and all that, and then based on your criteria, you can accept or reject one applicant, and you're on your way. It's really, really fascinating. So I know some of you are asking, I'm too busy. I can't manage MTR. I'm doing LTR for a reason. I want to do it very passively and allow my professional property manager to manage my property for all these years. That's fine. But just have an open mind. You will have the ability to do this without property manager, at least for right now. But once MTR, the asset class industry continue to evolve, I have to believe some property managers will help you do a lot of the legwork yourself for you instead of you doing everything on yourself. So from time being, you will have to do it yourself, which is not that bad. You can still do it remotely. You can still do it passively. Okay. And so just have a open mind, understand this is very much possible. But the beauty of using this Furnish Finder is because not only they have some additional resources, you can sign up for resources. They have these resources where they have this key check link to sign up for it, and you could screen tenants. You could create your own lease. They are state by state specifics. You can collect the rent. You can use this key check. The Furnish Finder have the ability to help you using technology, which is cool, and it's called key check. You could collect the rent. You could do a lot of different things. Collect the rent by collecting the credit card and do all that. So you can do everything. You can collect your money, the tenant, fully remotely, regardless of where you live. So that's the beauty of doing that, of using this method, using this website. So all the potential tenants, they are looking at the Furnish Finder to find a property to rent on a midterm rental situation. So they can find you because let's say I have a lot of investors over the years who bought long-term rentals in different markets. But let me do a walkthrough. Let me use Cape Coral, for example. We have many investors that purchase long-term rental in Cape Coral over many years. Let's say a prospective tenant want to move into a unit to rent for a few months. Let's say they want to move in April the 30th. And the max budget is, let's say, $3,400. Then they click the search on the map. I would prefer you rent an entire unit. Let's say you own a 3-bedroom, 2-bath home in Cape Coral somewhere, 3-bedroom, right? And you want no pets. You don't want to hotel. You're not going to rent by the room. You can rent your entire house. Let's say you bought a property in Cape Coral, single family home. A real example, $350,000, and you're charging $2,300 rent or $2,500, whatever. So if you want to convert your long-term rental into a short, medium-term rental, if you want to project at least $3,000 monthly rent to make this a profitable situation, to convert into an MTR, you can do a comparison. This is our existing landlord that already subscribed to Furnish Finder, there's no one way to find out how much you should charge if you were in your specific market. Each market is different, but MTR space is really very, very hyper local. There's no complete data. Everywhere is so different, but I'm just using Cape Coral as an example. Look at this one. Your property with 3 bedroom. I know our clients, their property is new construction. They just bought a couple of years ago, whatever. But in this case, I don't know exactly. This is Cape Coral right here, right? They even have our kind of location. It's located. You see the dark. You see the dark market is all over here. Cape Coral is right around here. Over here is Fort Myers, Florida. But this particular property, hard to say what the details, but this projected rent is $4,000. We don't know whether this is the actual amount that's going to be charged once and if a MTR occupant going to occupy his property. But you have an idea how much you can charge based on Apple comparison on the existing landlord on this subscriber database. However, if some of this property have better locations or they have a pool, they can charge more. For example, look at this, almost $6,000. $5,000. Right now, it's potentially possible. Many of our investors, they bought single family homes in Cape Coral through Justin. Okay. Instead of, for example, okay, it was 4 bedroom. Someone could rent this house for $4,300, fully furnished, tenants included, 4 bedroom, as welcome for 3 or 4 months at a time. Now the charging on a long-term rental like $2,500, maybe you can charge $4,300. May not be apple to apple comparison, but you get the idea, right? Another your properties that you bought may not be close areas. Someone is old or they're like $700,000, right? They have more amenities. That's why they can charge more. So it's hard to say. I don't have a precise estimate how much you can charge, but you have to do more research accordingly. But things are looking pretty nice, right? Some of the properties are located in a resort. Some you have a pool, you can charge more, but it depends. A lot of it, Cape Coral is hot in Southwest Florida. So a lot of these showings they have a pool. So you don't have a pool, that you might not be competing that well. But this one have no pool, and they're charging $3,700 for NTR. It's located right here, right? You see it? Or see here, you see here. I think you got the idea. Again, your benchmark long-term rental is $2,300, $2,500 after you bought a 360K single family home, new construction, somewhere in Cape Coral. So you do an apple to apple comparison. There's more. So actually, many more. There are a total of 77 homes in the greater Cape Coral area that are promoting their MidTerm rental houses in furnished finder. I have to say 77 homes in this large area, so desirable, is a shortage of MTR that can accommodate all those potential applicants. There's many more things you can do on this furnished finder. So the resources are available. I know I did not cover too many details, but there are other resources available. I'll share more on that later, but you can do it, right? Very much possible. So I'm going to restrict my video just on this particular time limit, but I will come back to do more videos. But so the big picture is, this is exciting. When I'm doing more research, I am sharing my information to my database, existing real estate members that I have that I gather up for the past 20 years, and you know who you are, and helping you, my members, several thousand of you that I cultivated over the past 20 years. Thank you for staying with me within my network, the University Network. But many of you are still with those long-term rentals, annual leases, and doing very well. You're doing passively because property managers are doing almost everything for you over the years. In the past, like 15, 20 years ago, I had promoted Arizona, Las Vegas, and some part of the Western region. Now, the prices have gone up so much. A lot of our long-term rental cash flow properties are located in the Midwest and South and Southeast because those homes are more affordable. So I'm promoting very heavily in Central Texas, Austin, San Antonio, in all over Alabama and Tennessee, and in Florida, Southwest Florida also. Cape Coral is part of it, which I use an example in Buffalo, New York, the Midwest portion. These pockets of homes in the neighborhood you can also switch into an MTR from your LTR concept. You gotta do more research. I'm doing it. It's your emerging class profit. You can 10x your income and the whole 9 yards. So this is very exciting. In the future, I'm going to bring some guest speakers that will show you some real case scenarios. They are killing it. They are doing very well. Meanwhile, just continue to watch my videos. Consult with me if you want. I have more resources available for you. We could do one-on-one consulting. That's what I do as well. So anyway, I know this video has taken longer than expected, but anyway, if you see a lot of value from this presentation, please smash the like button and subscribe to my YouTube channel so you will receive all aspects of real estate investing and the general housing market as well. I produce my weekly videos, and also subscribe to my website. Drop your email into the form below to subscribe to my weekly turnkey real estate investor newsletter. For those of you not already part of my free membership within my network, my community, and once you join my network, of course, you will receive weekly free real estate market updates, investment opportunities, real estate education, interview with top industry leaders, and would help investors to buy out-of-state investment properties, regardless of where you live. Thank you for listening. I will see you on the next video. This is Steve. Have a nice day. Bye-bye.